Hi, welcome to Stock Chat. Today I want to provide a quick summary of Airbnb S1 filing. The S1 filing date is December 1st, 2020. So Airbnb have four types of share. Class A, one share equal to one vote. This is what being offered to the public. The number of share being offered is 50 million share. The IPO price is between $44 and $50 per share. IPO day is still TBD, but rumored to be around mid-December 2020. Ticker symbol ABNB. Class B is one share equal to 20 votes. Class C has no voting right, and Class H have no voting right but can be converted to Class A upon selling. There are several risk factors that investors should know about Airbnb. First, Airbnb never achieved profitability since inception. The company kept losing money year over year. In 2017, its net loss is 70 millions. That ballooned quickly to a net loss of $696.9 million in September 2020. Revenue growth rate has slowed and this trend may continue. It has outstanding debt of $1.9975 billion as of September 30th, 2020. 63% in 2019 and 53% in 2020 of revenue were generated from listing outside of the US. On the other hand, Airbnb has several upside. As of now, it has 4 million hosts in 220 countries, 100,000 cities. September 30th, 2020, it has 5.6 million active listings, 54 million active bookers. 2019, 69% of revenue was from repeat guests. Due to the recent event in 2020, it has implemented several cost reductions. First, it reduced headcount by 25%, no employee bonus for 2020, reduced executive salary for 6 months. The serviceable addressable market is $1.5 trillion, $1.2 trillion for short-term stay, $239 billion for experience. The total addressable market is $3.4 trillion, $1.8 trillion for short-term stay, $1.4 trillion for experience, and $210 billion for long-term stay. So the potential market for Airbnb is huge. Now looking at the company balance sheet, we can see that the revenue is growing healthy year over year. Starting from 2015, its revenue is $900 million. In 2019, it increased to $4.8 billion in revenue. However, the company kept losing money year over year. You can look at the net loss in 2015 is $135 million, but in 2019 it's $674 million, and in 9 months alone of 2020, its net loss is $696 million. Between 2015 and 2019, the company have a decent amount of cash on hand, between 2 billion to 3 billion of cash. And as of September 30th, 2020, it has about 4.5 billion of cash. Remember, 2 billion of that is from debt that the company raised to protect the company from the recent event in 2020. Now, the total liability year over year can look scary. So 2015, $1.2 billion in total liability. That ballooned quickly to $5.8 billion in 2019 and increased to $6.8 billion in total liability in 9 months of 2020. On the other hand, the annual active booking number look pretty good. So in 2015, active booking is 72.4 millions. That increased uh, by almost 5x to 326.9 million active booking in 2019. Looking at the quarterly booking number, we also see the same trend. 2017, around 44 million active booking. 2018, around 60 million active booking. 2019, 80 million active booking, right? And then due to recent event, there's a huge drop in active booking in Q2 of 2020. However, there's a nice healthy rebound in Q3 of 2020, back up to 61.8 million active quarterly booking. Now, looking at the cash flow of the company, the net increase in cash or net decrease in cash um, look pretty decent in 2017 and 2019. In 2017, 2019, there's a increase in cash around 300 million in 2017 and 700 millions in 2019. However, in 2019, for some reason, there's a decrease in cash around $91 million. And clearly, in 9 months, 2020, there's a net decrease of 97 millions in cash. Now, again, looking at the monthly booking number uh, in 2019, between October to December, uh, there's a healthy number of 30 millions bookings, and that increased slightly in January and February of 2020 to 38.3 millions and 32.8 millions, and there's a sharp decrease in booking between March, April, May, and that's a nice rebound starting from June. So that's a very encouraging size. So overall, we can see that Airbnb is still in a growth phase. It burned tons and tons of money, but it showed a healthy growth in active booking, active listing, um, and healthy growth in revenue. So overall, there's a trade-off here. Or actually, there's a risk reward um, that any investor need to take into account. So please let me know what you think about um, Airbnb. Do you think it's a good company? Are you plan to invest it in Airbnb once it IPO? Um, and let me know what other types of video that you uh, want me to create, what types of information that you are looking for. Feel free to um, put down your thought in the comment section. And thank you for watching.